Welcome to another episode of our X Spaces, our podcast called Satoshi Talks. We have a dear guest we met in Amsterdam at the BTC conference. It's the CEO of Treasury, King. Hi, thanks for joining us.
Hey guys, great to be here. Thanks for having me.
Have you watched football yesterday? You're not a football fan.
No, yeah, I'm a football fan, but I'm from Amsterdam, so Ajax, and this is not our season. So what can you do? We've had better days, but we'll be back.
Yeah.
We'll be back at some point.
Yeah.
These are 4-year cycles, even football clubs.
Yeah, it's but you won the last match in Champions League, I saw.
Yeah, but we were at the bottom of I think the entire league, so, well, in terms of points. So at least we got something done. But yeah, we'll get there. We've had some coach changes, so we need to get back in balance.
So for someone who doesn't know about Khing I, maybe you can make a small intro and tell a bit about yourself. What are you excited about in crypto? Why did you choose crypto instead of Goldman? And maybe some interesting stories from your first years in crypto. Have you been ever scammed or stuff like that?
Sure. Yeah, no, I'm Dutch. I grew up in Amsterdam, studied econometrics, and then started working in London, as you say, for Goldman Sachs. And I ended up in the special situations group, which is a group investing with the bank's own capital and really in distressed. So mainly bankruptcies and other situations where things are going wrong. And I did that strategy for a number of years at Goldman. I went to Fortress, went to a few other places. I also ran my own hedge fund for a while. And the time I was running my own fund was post the global financial crisis of 2008. And obviously, the way that the central banks sort of solved these issues was by printing lots of money. So I saw really firsthand the effect of this almost unlimited quantitative easing, what it did, right, to inflation, to propping up balance sheets, to artificial levels, lots of those things. And then in the meantime, also in my fund, I saw actually not that many distress situations happening because of the very low artificial interest rates. So basically, and then my fund got to about 200 million of AUM, which is decent size. But in the end of the day, the industry was really consolidating, and it wasn't really enough to keep growing. So I returned capital, and that's when, for the first time, we're talking about 2017. For the first time in years, I had time to sort of sit down, look around me, think about what to do next. And I'd heard of Bitcoin before, obviously, but I just never had the time to investigate it and talk to someone about it. And it happened that I was at a poker tournament in that period, and I got obviously at some point kicked out. So I was at the bar and just having a drink, and that's why I met a guy who was a real Bitcoiner. And when he explained to me for the first time, someone explained to me sort of core principles and core values of Bitcoin, it immediately struck me. I was immediately sort of totally in love with it, really. And so that evening, I did my first trades, bought my first Bitcoins. I invited a guy for lunch the next day. And that was for me the turning point. And I remember it very clearly because of that poker tournament. And also I was just done with my fund. And from that moment on, so for the last 8 or 9 years, I've done a variety of things in both traditional finance and crypto. The last years, I was working with a large London-based hedge fund, and I really focused on the largest bankruptcies in the space because it really fit my own background. Right, I saw actually a big opportunity set when all the bankruptcies started happening in 2022, starting with Terra Luna, then Three Arrows fell, BlockFi, Celsius, all of those happened. And I was talking to a few funds about setting up a strategy to invest in these situations. And in that period, while I was talking to this one particular fund, FTX filed. And I really remember because the next week, it was end of November, actually about 3 years ago, the next week I joined the fund and we started buying FTX claims. We became the biggest creditor in FTX. And also in that period, we got involved in Genesis. I'm still on the board of Genesis, obviously the crypto bank that filed. And the beauty of that situation is that I got to meet some great people in the space, well, in all of them, because we were the biggest buyer of bankruptcy claims. And earlier this year, I saw what was happening with Metaplanet and MicroStrategy really evolving. And to me, it became an absolute no-brainer to start a Bitcoin treasury company here in Amsterdam, where the first exchange started years ago, centuries ago. And so I called one of the first guys I called was David Bailey, because I saw what he was doing with his fund UTXO, and he gave his backing very early on. And then the other core relationship from that period before was actually Cameron and Tyler Winklevoss, who also supported me for setting up Treasury. And so the last now 6 months or so, I've been working on a couple of things. One is raising the capital. We closed that round a while back. We raised about $150 million, backed by Winklevoss, Nakamoto, and about 50 other investors. Then, our listing process, which we're in the process of doing through a reverse listing on Euronext Amsterdam. And then also buying the Bitcoin Amsterdam conference where we met, building a team, everything else around it. So we are now somewhere in the top 50 globally. We have 1,111 Bitcoin, so 1111. We're really building out our infrastructure, everything else around it. And then and once we're listed, which we're still waiting for to happen, we'll follow we'll keep growing from there. We can talk more about that. So that's a bit of the background of what happened from really starting in finance and then ending up here, starting treasury.
Do you regret leaving TradFi for crypto?
Not at all. No. So to be fair, first short answer is no. But also now I sort of feel I have the best of both worlds, because Bitcoin treasury companies really merge the two, right? You take digital gold, you take a Bitcoin, and effectively what we're doing is we're securitizing it, right? And again, that's something that Michael Saylor has invented. I didn't come up with that, but we're bringing it first. We're bringing it to the equity market. So we're making the digital gold turn into digital capital, and then over time we'll issue digital credit against it. So that's why I actually really love every moment of doing this, because one, I'm building a new business. Two, doing it with an asset that I really believe in and really love and believe in the long-term growth, Bitcoin. And three is building a real business around that makes it grow and also increases adoption, right? Because one of the key things that Bitcoin treasury companies do and achieve is bringing more capital into Bitcoin. If you in the moment you go to the markets, you raise equity, you bring investors into Bitcoin, because you buy Bitcoin with that. And it's both. It's retail investors who want easy access, and it's also institutional investors. And especially on the institutional side, that's where a lot of the growth is, right? Because Bitcoin is still only at 3% adoption, and there's still a massive amount of adoption that will happen inevitably on the institutional side. And the more we can facilitate that, the better. And then the other way we're doing that is, of course, through the conference, right? The conference is a fantastic event. It brings more than 5,000 people together, great speakers, but also it increases adoption again. It educates. There's also people there that have hardly, they're just, thinking about Bitcoin. They don't have anything yet. They want to understand more. There's families there. And that's the other important thing I think we do as treasury companies.
Yeah, at the conference, I've seen even like not only crypto people, like I don't know, female or male. There are like literally families coming with their little children at the conference. Have you noticed? Like whole families coming and having fun.
It's
very,
really
very
cool.
cool event.
Growing the next generation of hodlers.
Yeah, totally. And one of the Dutch newspapers here, and most of the traditional media is quite skeptical on crypto and on Bitcoin, right? We've seen it in most countries, but especially in Europe, you still see that. But this newspaper, one of the oldest here, wrote a really nice article actually about the journalist followed around a dad and his son throughout the day, what they were doing, how they were learning, how they were thinking about it. So it's really cool actually, and I think that's a real. If we get, if only one conversion from that's real value, I think.
Yeah, we were talking with people at the event. Generally, like Bitcoiners are very bullish. It's genetic, I think. But one thing we were talking about, they were asking, like, why instead of just buying Bitcoin, you invest in a Bitcoin treasury company? Why should they choose this path?
Sure. No, there's a couple of reasons, I think. One reason is simple as access, right? So for individual investors, they may already have a trading account. They don't want to open an account in exchange for a variety of reasons. They can just buy essentially Bitcoin exposure straight through that, and that's ease, right? They in Europe, in most countries, it's actually quite difficult to buy an ETF even. And if you want to have a simple portfolio in euros, trading in your own market hours, there's actually no real option right now. Treasury would also, once listed, be the first one on a primary exchange in Europe, being accessible by most trading apps. So that's one ease of use. And then a second important reason is that a Bitcoin treasury company that does a good job in building a capital base, raising equity, raising digital credit, perhaps utilizing their Bitcoin. We can talk more about that. All of that, what you achieve with that is growing the Bitcoin per share. So the way I always compare it is, right, if you got $1 to invest, you could buy, or say 100,000, you could buy called one Bitcoin, or you buy a piece of ETF, which equates to one Bitcoin. If you buy into a Bitcoin treasury company, you get the same on day one, maybe even a little bit less if it trades at a premium. But the whole idea is that because of all these things that Bitcoin treasury company does, is that the Bitcoin per share increases. So after 2 or 3 years, maybe Bitcoin has doubled. That would be great for all of us. If you bought that one Bitcoin, you've doubled your money. Fantastic. You still hold one Bitcoin, is now worth twice as much. If you bought shares of a Bitcoin treasury company, they did a good job, then not only will Bitcoin have doubled, you will also increase your Bitcoin per share, right? In 2 years' time, you may have 1.5 or 2 Bitcoins. So then suddenly you had $100,000 would be 400,000 instead of 200,000. So that's another very important reason. And then I think the third thing is more broadly is that I genuinely believe that Bitcoin treasury companies make the Bitcoin ecosystem stronger, right? Again, we bring in more investors to the space through digital credit. We find different ways to utilize Bitcoin. We work on education. Bitcoin is kind of unique. Bitcoin was called 17 years ago. It was the genesis. It was deployed and obviously immutable. It doesn't change anymore. But also in itself, it's amazing. It grew to an asset. It's growing to an asset from almost $2 trillion. But obviously it doesn't have a CEO, right? It doesn't have a marketing team. Everything else is done by the community around it. And with Bitcoin treasury companies, in a way, we're making that sort of, I guess we're in a way institutionalizing that, right? We're saying, look, we're here to expand Bitcoin, to educate. We're going to use the different sources of capital to build conferences, do magazines, issue different instruments. All these things have around, and I think that in itself is a good thing for the Bitcoin ecosystem.
Yeah, for sure. We've been with Victor last week at the Binance Blockchain Week, and Michael Saylor was there. Yeah, I think it was the first time when I was deeply inside the mechanics of it, and he presented several tools like he has in MicroStrategy actually without micro. And do you have the same thing? Like, do you have more tools where investors can choose to invest?
Yes, well, not at the moment because we have to wait for our listing for that to happen. But that's very much what we will be doing. That's a very important component. And first of all, it's something very close to my heart because I set up at some point for an American hedge fund, set up a securitization business, basically securitizing loans. It became $2.5 billion dollar business. So in terms of taking an asset and issuing different instruments against it, that's something that I've done before, and I really like doing it, and I can totally see the growth in that. So that to me is actually really the biggest innovation of strategy or of Michael Saylor. Is really a couple in a row, right? The first one is taking digital gold and putting it on a public company balance sheet. 5 years ago, people were like, well, what's he doing? but then issuing credit against it, that is really a unique thing. And then especially the type of instruments, right? Mainly it's now pref securities. There's different types of pref securities. They are perpetual, so the latest ones never mature. It's a constant dividend stream that you have to pay out, and that the investor get. And he actually took them public as well. He took them public as separate instruments, which really increases liquidity. And he did so-called shelf filings. It's a bit different in Europe, but basically a filing where you can always issue these, so-called at the market. So all of these things, all this playbook is very much the business model we're building ourselves, we're preparing for. And the beauty is that in Amsterdam, on Euronext Amsterdam, that's all possible, right? Because some exchanges, these techniques are not possible for different reasons. But Euronext Amsterdam is obviously, it has all the infrastructure. It's a very advanced exchange. And we can essentially, replicate that playbook. So 100% that this building of called structured credit around Bitcoin is a core part of what we will be doing.
Can we think maybe we can make like a 101 for people, because we talk like in bits of information, and we talked what strategy does and like different instruments that they have, but it's very hard, and a lot of people misunderstand what treasury companies really are, and very often they mistake them for holding companies or just like meme stocks for BTC. Maybe we can explain from like the ground level what Saylor's innovation was, what exactly did he do, and how is it a sustainable business model, like very
Sure.
simple for people.
No, it's a great point. And also, frankly, the models will be changing a little bit, right? Like
Yeah.
anything in our space, developments are very quick. So I'll start with a quick recap of what's happened so far, but also be aware that things are probably going to be changing going forward. So yeah, Saylor he was running a SaaS company called MicroStrategy. And as he would say himself, it actually wasn't going that well. He was being competed away by Microsoft. And he had most companies have what's called a treasury, right? It's money on your balance sheet. And what do you do with that? So Heineken has it, and Disney has it, etc. But normally people will put it in money market fund to get a bit of interest on it, right? Or maybe they keep it in cash on the balance sheet, or they do a few things to just keep the cash, and for the cash to be ready to be used whenever you need it. And what he started doing, he started putting that his treasury, MicroStrategy's treasury, he started putting it into Bitcoin, and people were as I mentioned earlier, people were sort of confused by that, like why would you do that? Why would investors want that? Right? This is a public company, and it's all about what investors want. The market will decide, right? The market will decide your pricing. That's the beauty of the stock market. But it turned out people kind of ended up liking it. So he grew his company, he issued more equity, he kept growing. And he kept buying more Bitcoin with that, right? Now we're talking about he started in 2020. Obviously, Bitcoin had a big run in that period. So fast forward, what he ended up doing in 2024, he ended up suddenly raising a lot more equity. He started what's called ATM programs, called at the market, which means that he's basically selling shares every day in the market. Now, almost no public company does that or is able to do that, because a shareholder would generally always dislike that, right? If a company like, say, a Disney, or again, if a Unilever or a Shell issues shares every day, shareholders will see it as dilution. Their share, they get a little bit less every day because it's getting diluted. Because the company is the same size, but you issue more shares. That's bad, basically, dilution. But the unique thing about what Saylor ended up doing is saying, look, we're strategy, we're MicroStrategy. We own basically a massive Bitcoin balance. Our real business, the soft business, is tiny. It almost doesn't matter anymore. But if our valuation is above the value of our Bitcoin, if we sell shares, it means we sell shares a bit expensive, which means we sell shares, we raise cash, we buy Bitcoin with that. That's accretive. That's good for shareholders. So I issue more shares, but because I'm selling them sort of a little bit expensive, it's actually really good for existing shareholders, because we're gaining Bitcoin per share, right? With that, the Bitcoin per share goes up. And that was really a quote innovation from last year, which also the market really liked. So last year, I forget, Bitcoin was up like 2 times, but MicroStrategy, the share was up 5 times. He massively outperformed Bitcoin, right, in 2024. This year is a little bit different, actually, unfortunately. So, so that was the first big innovation. The first innovation was putting Bitcoin in a public company and making shareholders understand that. Second innovation was this ATM program, raising equity in massive amounts. So he grew suddenly to $100 billion business in 24. And then the third big innovation is issuing digital credit. He started issuing with convertibles. That was actually too much, or not, I would say, massively life-changing. This year, and only 9 months ago, we started issuing these perpetual bonds. So it's basically a bond that pays called 10%, 10 to 12%. It never repays. So what he does with that is he says, look, if you're a long-term investor, if you like Bitcoin, and if you don't mind the volatility, as we all know, Bitcoin can be down 20%, 30%. It can be up a lot too, but it can also be down quite a bit. So if you don't mind that volatility, you should buy MicroStrategy equity. You should buy the stock. Or you buy Bitcoin outright, fine too. If you want what he calls amplified Bitcoin with essentially outperforming Bitcoin, you buy the stock. If you don't like that, if you have, say, you need to put your kids in college in 2 years' time, 3 years' time, or you don't want to buy a house, or anyway, you like Bitcoin, you like the exposure, but you don't like the volatility, you don't want to take that price risk, then you can buy one of these bonds. So you get paid between 10 and 12% per year. It's backed by Bitcoin, and it's safe. It's safe for return. It's less volatile, and it's constant. So to your earlier question, Dimitri, he basically is creating all these different products for different kind of risk preferences, and it's all backed by Bitcoin, right? So this is in a nutshell what a Bitcoin Treasury company does. It is offering different kind of products to different kind of investors to get exposure to Bitcoin, and in the process really grow and become a large holder of Bitcoin. And then there's different ways that different Bitcoin Treasury companies grow their model from there. We can talk about maybe after this, but this is the core of a Bitcoin Treasury company at its very nature.
Yeah, that's very interesting. I was thinking as you were explaining, isn't issuing shares at such frequency, in a way, maybe not similar, but resembles the printing that the federal governments do?
That's a funny question, actually, good one. Well, the big difference is the federal government prints it without any backing, right? It's not like they do it because there's more resources being found or the GDP is higher. It's linked to nothing. It's just printing, which is the whole point of inflation. The whole point of that is essentially creating inflation, which solve for some sins, right? And this started even in the First World War. A lot of countries didn't want to go to the First World War. And if they would have raised taxes to pay for it, citizens would have revolted. If they would have, tried to issue debt, probably wouldn't have possible. They just ended up printing the money for that, right? So it's actually quite different. The issuance of, because what happens is the moment that a Bitcoin Treasury company issues more shares or more debt, what you do with the proceeds immediately is buy Bitcoin. So the balance increases, and that's why it's actually quite good to look at the Bitcoin per share. You can see how a company grows, hopefully, Bitcoin per share. And if it does do that, then it does do something right? It increases. If you bought one share, you're getting more Bitcoin for that share over time. That's why it's an important metric, actually.
Yeah. And I was thinking now, because we were talking, like we internally and with friends, why would strategy buy Bitcoin at 100K per Bitcoin, for example, because it was cheaper. But now that you're explaining it, it makes sense when you're issuing shares, but at a premium price than Bitcoin, you're actually buying Bitcoin at a discount with the money that you get from the market.
Exactly right.
And that people pay for these shares.
Yeah.
I was thinking now it's a different from the government as well, because they just issue the money and they go into the market. But here people need to pay the money to get the shares. So
Yeah, exactly. It's almost the opposite, actually. So No, that's right. And obviously, the way that the long-term vision is, you hold your Bitcoin forever. You don't sell. And in that mindset, you just want to keep buying. You don't want to try to time the market either. Or you want to
Yeah.
just keep buying. So once you raise it, you buy. And also certainly Michael Saylor, he really doesn't mind buying at sort of all-time highs, right? If he buys, he always announces on Monday what he's bought the week before. And if it's a new high print, he's actually very proud of it, right? Because also it means that his entire Bitcoin balance is worth that much, right? You printed 126, that's fine because everything is worth that. So yeah, it is a very novel model. We've obviously gone through a very interesting year in that regard. It was a bit of a hype cycle, frankly, in the summer. So in the summer, you saw many altcoins, other coins doing the same thing, raising money to go public through a vehicle, mainly in the US. You saw lots of Bitcoin treasury companies appear. So suddenly there's like 200 what they call DATs, right? Digital asset treasuries, not just Bitcoin, but also other coins. And I think, and then the market came off very quickly again. So where we are now is that, one is that some coins, it's become clear that there's no reason for them to be in a public vehicle, in a listed company. Bitcoin, certainly, I think we would all agree here, is different because it's digital gold. It has real store of value over time. It will become a very important currency going forward. So that has real value. That's different. But there's some coins where you could argue there isn't that value. So that's one. And those are trading at very low levels. They trade well below the value of their coins. Two is that you need to have a real team with a real strategy that can execute on the capital market side. So again, issue all those different instruments. So there are some teams that in the end didn't get the support from the markets. And the markets, again, the stock market is the most disciplined animal out there, because if the market doesn't like your stock, it doesn't think you can create value, it doesn't think you should really exist, then what happens? You trade below your Bitcoin. And so there's a number of treasury companies, both Bitcoin and other coins, that trade well below their the value of their coins, which really means that the market's telling you should stop. You should basically close the whole business and pay the proceeds to shareholders, because that's worth more than the stock market value. And that's where we are now. And I think also this is also the environment now where you see different models appear. So the Michael Saylor strategy model is very pure. It's he holds Bitcoin, but he doesn't, and he wants to issue instruments, but he hasn't utilizing Bitcoin anyway, right? Mm-hmm. And obviously he's the first. He's by far the largest, and he has a very strong vision, and that works in its own right. The market was there was a bit of FUD in the last few weeks on how he gets to pay all the dividends to the bonds that he's issued, right? Coupons, dividends. There's like this hybrid here. He has about 800 million a year in payments he has to make to credit instruments, but he has no income, right? Because the software business is tiny now. He has no income on Bitcoin, so people were suddenly worried about that. I think with lots of FUD, and he just did something smart. That look, we'll put 1.4 billion separately in accounts, so it pays almost 2 years in interest. If we had to sell our Bitcoin, we don't want to. If we had to, we can pay 74 years of interest. In other words, there's nothing, no issue here. So that's one model. And then there's different models of where people are going. Metaplanet is obviously a big one in Japan, very successful. Essentially, I think the second largest treasury globally, and they're quite more active in trading options around Bitcoin. They generate income with that. They made an announcement they're going to be more part in some sort of financial services ecosystem. So they're doing different things. So everybody's doing something different, actually. Mm-hmm. You can see different models appearing now, which I think is very much a good thing.
You mentioned the printing of the states. I'm not sure about the economics, the macro implications of this, but the question is, does it make sense for the states to print money and buy Bitcoin for their treasury?
For the United States government?
Yeah.
That's a good question. Well, obviously, there's been lots of talk about the strategic Bitcoin reserve, right? So President Trump has made that part of the broader crypto strategy of the United States. I would say as a core thing, it's probably not a good thing because ultimately, when it starts with just printing money, that's in general, government should stop doing that, right? So that's probably not a good thing. Printing money to buy Bitcoin is something different, but it's then it becomes a pure investment, which I know a government has to run, right? Government is there, it has to run, it has to provide services to its citizens. It's what it pay taxes for. There's lots of things the government has to do. And if it just prints money to buy Bitcoin, I'm not sure that's ultimately the best thing for a government to do. Even though we all believe in the long-term value of Bitcoin, I don't think that's probably where it should be printing money in the first place, and then also not to do that actually.
And
Yeah.
about the
Go ahead.
treasury companies, let's say in the future, in 100 years or so, Bitcoin will be very scarce. It probably will cost millions a piece. And it will be very few in circulation, like most will be either hodled by institutions, by individuals, or lost. And at that time, does it make, let's say, sense for many Bitcoin treasury companies to still exist and still doing this mechanism?
I think more even then, because then I'm firmly of the belief that by that time, the Bitcoin treasury companies will be kind of the largest financial institutions in the world, because they will have accumulated these very large balance sheets. And by that point in time, especially when Bitcoin will become sort of the world's reserve currency, you can use that Bitcoin. You can really act like a bank or
When
like
you
an
say
insurance
use it,
company.
can we give examples like loans? What does it mean use it?
Yeah, lending, for instance, right? You can do different things. You can take Bitcoin in and then lend dollars against it. People need it. You can actually lend the Bitcoin for people to start businesses, to different things. You can lend it to trading firms, to everything in the ecosystem. And I think we're going to a world where what we now know as a traditional financial system, right? The banks and what they do with the custody, the way they run the balance sheets, and then we have sort of in our own industry, you got crypto exchanges, market makers, Bitcoin treasury company, etc. There'll be more and more ways to start overlapping. And the moment that these Bitcoin treasury companies will have very large balance sheets, as you say, the moment it goes to a million, some of these companies will be massive. They'll be larger than some of the national banks right now. And national banks meaning like, the national champions that each country has in the banking system. So they will take over that role, right? And this is a little bit how the banks that hundreds of years ago had gold became the largest institutions of their times, right? They use gold-backed loans, etc. That's how we used to do years ago, and it will be, I think, the future where we'll have Bitcoin-backed loans. So yeah, that's and it's all about being able to use Bitcoin, right? Right now, obviously, the whole financial ecosystem runs on fiat currencies, so it's quite difficult to use your Bitcoin, right? But it's definitely growing, and it's only going to go one direction.
Do you think some banks might catch this wave, this new, I don't know, reality, the future? We'll see into the future, and we'll jump on board and try to kind of not become irrelevant in a way, and do what needs to be done to make sure that they prosper in 50 years as well.
I think some will, and I hope so. Right, it will only increase Bitcoin adoption, will only be better, and there'll be a role for us. Maybe we'll be competing on some elements. Some will be very synergistic. I think it will. I think it's inevitable. I do think banks will be at the slower end, right, in terms of adoption, because they got so much history, the way they operate and the way they think about it. And obviously, I know a lot of people in traditional finance, and a lot of people are not even open to Bitcoin. They're like, "Oh, I don't see the value of it. It doesn't generate any cash flow." And I've really stopped trying to convince them, argue them. I think it's a very low hit rate. It's just no point. I much rather educate people through the conference or like this streaming or podcast. It's much better to talk to people who are actually interested in this, because I found really that when you speak to someone who doesn't know anything about Bitcoin and they ask you, "Oh, what is it actually?" There's really two types. The type that is curious, wants to know more. They may end up not liking it, but at least you want to understand and form a view based on research. and some people just dismiss it because it doesn't fit into their traditional frameworks of thinking about markets. And so far, I've seen a lot of people at banks think in that way. So I think it'd be quite a slow adoption.
Okay, let's move. Let's talk more about Treasury. We've explored like a wide pool of options and of different types of strategies and of instruments that Treasury companies use. Can you tell us? In the beginning, we were comparing Treasury with strategy, and you said that you'll have like a different set of instruments in the beginning. Can you tell us how will Treasury look like when it's live on the stock exchange, and what's maybe the roadmap? How do you want? What's your vision for this set of tools and instruments for Treasury?
Sure. Yeah, it's interesting. I think the way that any treasury company will develop, and so definitely also us, really depends on your home market. It depends on your investor base. It depends on a number of things, right? And I think one of the strengths of the European market is that the fixed income market is very large. So historically, you got all the pension funds, insurance companies, fixed income instruments is just very much actually larger than the US. So also the pref securities market is about double the size that it is in the US. So that's a very large opportunity set for us to grow there. So the different prefs is very much a focus area. I would say that as Treasury, the way we think about it is that it definitely makes sense to utilize your Bitcoin in a very risk-sensitive way, risk-averse, risk-sensitive way, in a smart way, basically, not obviously taking on too much risk, and that's very important. So I really see it as a Bitcoin capital markets business, and it will be some lending. It will be some options trading. It will be seeing if different institutions that can use your Bitcoin and we get paid for it and make sure our risk is limited. There's a variety of ways that like almost like a traditional capital markets business works. But for us, it's with Bitcoin as the currency. And that is still something that's still being developed because the ecosystem is still quite young and developing, but we're seeing a lot of interesting things appear around us now where that's very much possible. Then the second bit is obviously the what we call the media and events business, right? We got the Amsterdam conference, going to launch new products around that, do actually much more than before, and that's very important. It also generates income, but most importantly, it generates adoption and also branding for us. And then the third thing is with Bitcoin as a strategic reserve, and those two called business lines, we can issue credit, right? Because if you issue credit, you got to pay interest, and you want to have some income to pay for that interest, and that's what the first two businesses are for.
Yeah, Dimitri, you wanted to add something because
I wanted to ask something. There is a debate. I wouldn't say debate, but it's a discussion on X started by Elon Musk probably about European Union and lagging behind, being stuck in bureaucracy and lagging behind China and US on the tech part, let's say, maybe investing as well. Do you find it to be true when related to the activity of your company? Do you find it easy or hard to work in this environment, in our European environment?
Yeah, it's a good question. So let's first say that obviously the US, since the Trump presidency and even the Trump election, changed massively to the better, right? It was there's Operation Choke Point 2.0 under the previous administration, so that changed a big time. So the US took a big leap forward in terms of adoption, in terms of being pro crypto in a broader sense. And you can see it in the administration, right? A lot of key roles are filled by appointees who are actually quite pro crypto, which is fantastic for the industry overall. Now in Europe, the gap between Europe has therefore become even bigger because Europe is slower moving, is a bit more cautious with crypto slash Bitcoin, and the US has jumped ahead. So I think that contrast is becoming more and more prevalent. Um, Having said that, European Union, obviously, the way, as you know, it works here, you got a European guidelines, and then the national entities have to implement it according to the guidelines. So if you look at, for instance, MiCAR, that took a long time to put together, which is really for, it's not relevant for us, it's really for service providers in the crypto space in a broad sense. That took a long time to put together. But once it's there, it's kind of at least it gives a framework for people to work with. So I would say that the European is, because of this different national, the different countries, and then the two-layered structure, is much slower moving. But the intention is there to at least have it moving. So I think that's a good thing. Where I do think there's an important role again for us to play is that I feel there's still quite some call it lack of knowledge / catching up to do for different government entities in Europe in terms of understanding crypto and understanding Bitcoin. I really feel that, and I feel often they're not well educated. They're not well. It hasn't been properly explained to them, and that is a real problem, right? Because as we all know, it takes time to understand crypto, to understand Bitcoin. And if the media is neutral to negatives, it doesn't help. Sometimes people are not very pro. So there's a lot of catching up to do, and the slowness and the general concerns that is being sort of going around on X is in large part, I think, caused by that. So if you want to summarize, for me, I'm long-term bullish, but yeah, short-term definitely we could use a bit of fire in terms of crypto adoption, especially in terms of crypto adoption, right? I think Elon Musk probably meant it in a broader sense, right? Also talking about the military, different political systems, everything else around it. And that's more of a broader question, whether you believe in a union like the European Union, which, for instance, the UK didn't, right? The British voters voted for Brexit ultimately, said, look, we've been part of the EU. We don't believe that's good for us. We want to be separate, and that's obviously it was a democratic vote to exit the European Union. Although I read recent articles that it's now been sort of, I guess, objectively shown that leaving the European Union ultimately was not a good thing for Great Britain. It was a net negative in economic terms for them. So
Yeah, it's a good. I like your answer because I think we kind of we might not like it, and I certainly don't like some things that politicians or influencers from US say about us, but we kind of needed to be said that and kind of get back on track and rediscover our fire, as you put it, because we have a lot of very cool and creative people here, and yeah, we can do more for sure. But
100%.
it's more about communication, I think, and hurting our feelings when
Exactly.
when being right or not.
Yeah. No, yeah.
Yeah. So I we don't know if we are in a super cycle, but what we know for sure is that eventually we'll have a bear market. And I'm curious, what strategies do you have in mind for bear market? Because we've seen with strategy as well, when the price of BTC drops a little, like the price of the shares drops more than that usually. And yeah, maybe you could tell us more about like the strategy to walk and to go through the bear markets and the hard times.
Yeah, sure. Now, look, obviously, again, a share in a Bitcoin Treasury company, it's sort of, and this is what Sader calls it, is amplified Bitcoin, right? If Bitcoin goes up, it should go up more. If Bitcoin goes down, it probably goes down more. And we've seen that because also with Bitcoin coming off the last couple of months, we've also seen there's those multiples to NAV come off. So it's really a double effect. I do think that whole talk about the 4-year cycle and everything, I'm in the camp where I think the cycle is kind of broken. I think we're in a different part now because of this stable holders of capital. I mean, for example, I think when we saw that those big liquidations on October 10th, Bitcoin treasury companies don't sell, right? They don't have recourse leverage. They don't have margin calls. They may have leverage through issuing those bonds, but they don't have margin calls. So they're actually not a forced seller. And they don't need to hedge their book. They don't need to show returns to shareholders next month. That's the beauty. A Bitcoin treasury company is a long-term holder, actually is a stabilizing factor in amidst market volatility. So I think that's an important component. And then what do you do in the bear market, right? So like we've always seen, bear market is also the best times to build because there's actually anyway a little bit less pressure on you. You sort of people stop caring. People are just working on their own things,
Hey,
and it's a good time to put your
I
head down.
knew it's a scam, you know.
Yeah, exactly. Yeah,
Everyone said
agree.
that. I knew
Yeah,
it will
very
go down.
suddenly, yeah, it's the opposite of FOMO. So you can really build your own thing, and that's what you need to do, right? You keep building, and there's also if you're in a bear market, there's going to be an inevitable bull market again, and that's when things go extra hard. We saw that again in 2020 when suddenly there was sort of DeFi summer and everything that was being built before was really kicking off. So I think it will still be an interesting market for us. There may be some consolidation, right? My own background is obviously on the special situation side. So if there is, really Bitcoin treasury companies that are struggling valuation-wise or otherwise, I think there may be ways to make the industry stronger by consolidating that. So there's always going to be something to do for us, for sure. I still hope we'll have a very strong bear market in 26 though. That's still my bet is on that. We're a bit of a wobble, a bit of a strange period on a macro level, same period with central banks. We'll have midterms next year in the US. So I'm still betting on a very strong 26 actually.
Have you thought about a marketing move, a PR move in Europe, where you promote your company as, let's say, made in Europe for Europeans? So invest in a European company, not I don't know, North American or Chinese or Singaporean company. Invest in a European company because they have advantages, for example, this and this and this. Is this a strategy you think of using?
It's a very interesting question. We've been doing quite some time on the investor base, right? Who is actually the investor base in a Bitcoin treasury company? You want to understand that because it's so important. Because your shares, you're a very important part of your product, right? Because you got to issue the shares and etc. So my take so far is it's actually very international buyer base because typically so far the people who really trade Bitcoin treasury companies, which people understand the space a little bit. So it's global. Maybe they made some money in crypto. They want to do more equities. They see a trade here. So long story short, I think it's very important for there to be regional players, right? I think, strategy is fantastic. There's a couple of very large players in the US. That's great. But I think it's also very important and inevitable. We'll have a few large players in Europe and Asia and in Africa and everything else. And I think that's the most important thing. There is a regional player that will have local currency, local trading hours, understands the local landscape, all the different stakeholders from the politicians to the regulators to the banks, everything else. I think it's all very important. I don't think necessarily it needs to be the marketing story, right? Even though we do a little bit because, Europe's digital golden age and it's more to say, look, we have a lot of history in Europe. There's great infrastructure. There has to be a Bitcoin treasury company here. It's going to be very important for us to do it here. We want to be there in Europe. More that than sort of saying, look, this is by us versus others because we're European. I'm less of that sort of called nationalistic view. More like, hey, this is a growing industry. We want to be part of that in Europe.
Yeah, makes sense. Victor, do you have more questions?
No, I don't actually. I don't. It's a very cool. Maybe the last one just popped my mind. Maybe you could tell us a little bit more about the strategies, perpetual contracts that like you have to pay indefinitely, like a percentage on them, dividends. and they never expire. This, at least for a person that's not into the financial field, it looks and sounds a bit fishy in terms of how could this be sustainable.
Yeah, no, that's interesting. It's what's called a hybrid instrument. That's why it's kind of a real innovation. A lot of banks have them already in Europe, but it's why it's called hybrid, because it's a bit like equity, because equity also never has to be paid back, right? It's also what they call junior in the capital structure. So if for whatever reason there is problems in the company, let's hope not, and it's very unlikely, but then these perpetuals, these prefs, are almost last in line. Last in line for recovery is the actual equity, but these are almost last in line. So it's what they call very junior in the capital structure. And these coupons, again, it's a bit of a question where you call them coupons or dividends. You can really call them both. But these coupons, they're actually what's called non-cumulative. And what does it mean? It means that the company can switch them off. The company can literally say, hey, we don't have enough cash right now. We're not going to pay your coupon right now. And there's nothing you can do as a holder. If you bought a security, you count on 10 years forever. After year 3, they can say, actually, you're not paying this year. Sorry. Obviously, the thing will drop. They have to live with that, but they can do that. And the next year, they can switch it on again, but it restarts. It's not like they have to pay, that's called non-cumulative. They don't have to say, oh, sorry, I didn't pay you last year. I'll pay you for last year and I'll pay you for this year. No, they can just continue. They can have a gap. So think about a company perspective. From a company, it is an attractive instrument because if your assumption is that Bitcoin goes up by 20 or 30 or more % per year, you raise, say, 100 million, you buy 100 million of Bitcoin. That 100 million of Bitcoin goes up by, say, 25% per year. But it costs you only 10% per year. So you create real value. Where does the value go? The value goes to the shareholders, right? Because the shareholders are suddenly getting Bitcoin per share growth. So that's a strong assumption. Obviously, if the growth of Bitcoin is less than 10% per year, it's actually negative. It means that the company is anyway losing Bitcoin per share because it has to pay those coupons. So these pref securities, they're sort of in the middle. They're definitely not fishy. They're tried and tested instruments. A lot of banks have them, right? A lot of German banks, Dutch banks, they all have pref securities. And the reason why investors like them is because they get a relatively high coupon. They get, again, 10% or more, much higher than if you buy a bond from a sort of what they call a non-investment grade company, high yield company. And in theory, it's an instrument you can hold forever, right? And now MicroStrategy issued five of these. They're all a little bit different, so not all exactly the same. There's a few that are cumulative. So if they switch it off, it's possible, but then they have to pay the catch up, right? But the latest ones are non-cumulative. So long story short, the beauty of that is that it offers investors a choice. It offers investors to say, look, I'm an investor, I'm long term, I like Bitcoin, love volatility. You buy the stock, you get more volatility on Bitcoin even. If you say, look, I like stable income stream, I can still get Bitcoin exposure because it's in a way backed by Bitcoin, much higher than I can make in my bank account or other accounts. I'm going to buy the pref security. That's not a choice. So that's really the beauty of it.
But
and I would say,
no, continue your thought.
Yeah, I was going to say, and I think the beauty is this is all super innovation, right? These instruments were all sort of invented this year. I'm very optimistic for 2026 that other companies will be issuing different instruments. Strategy will continue to issue them. The market can compare. You can really see a market where people say, okay, I like this one, don't like this one, and find the best footing. So from that perspective, I'm really excited how this is going to develop. And I think, as I said earlier, I think Bitcoin Treasury companies will develop their models both on that side, but also on the asset side. What do you do with the Bitcoin, right? You do nothing. You do a lot. You use it for there's now people developing these models, right? There's one company that actually really is stimulating like small businesses. You'll choose your own thing. So I think that's a good thing because, again, it makes the markets more efficient.
Yeah. would it make sense, or can companies buy back this perpetuals? Do they have this right to buy them back?
Always, yeah, good
Yeah.
question. That's also the thing where so as mentioned earlier, some of these companies are now trading below NAV. So say they have 100 million of Bitcoin, but their market cap is only 70 million, so they trade below the value. Some of these mean buying back shares, because if you do
Mhm.
that, it's again accretive to shareholders, right? If you sell shares expensive, that's good for existing shareholders. But if you trade expensive, but if you trade cheap, then it's good if you buy back shares. Some of
Mhm.
these companies have issued, they've taken on loans to buy back shares, or to try different things. The problem is if you trade below NAV, if you trade below the value of Bitcoin, you cannot sell shares anymore, because then it becomes a bad thing to buy shares, right? Then it's really, you lose a lot of money for your a lot of value for your existing shareholders. So you have to come up with different things, including, for instance, borrowing money to try to do that. On the pref side, so far the prefs have traded fairly well, so there's been no real reason for them to buy back. The
Mhm.
moment that the market gets really concerned about the company's ability to buy to keep paying those coupons, that's when you get discounts and you start trading below.
Mhm. Mhm.
And then maybe as a company, you got to find the right way to either buy back these prefs or other instruments without losing that value for shareholders. So I think that's right. That's an interesting thing that's happening right now. But there aren't that many out there. So again, Strategy was the first. There's a few others that have done it, but not, maybe a handful only. And the prefs are generally trading quite okay. The moment where you see these prefs come under pressure is the moment if Bitcoin drops a lot. If
Mhm.
Bitcoin drops to $50,000 now, let's hope it doesn't. Let's hope it never gets back there. But if it does, then obviously a company that issued 20% of pref securities against another 80% of Bitcoin value now drops. So it's only 50. So it gets much riskier, right? Think about buying a house. You buy a house over 100,000, you get a mortgage of 80,000 against it, but suddenly the value of your house drops. Then man gets really
Mhm.
concerned, right? So this is the same thing. So it's Bitcoin backed credit. So if Bitcoin really drops, they'll become a concern probably for pref securities, and then they may try to a discount. And then if the company has cash, it may be interesting for them to buy back.
Mhm. Yeah, that's interesting. Yeah, thanks for. I had a lot of questions and stuff that I didn't quite understand. You made it much clearer. From how I see it,
Great.
it it really gives you a lot of flexibility and a lot of options. Even if the times are bad, you can do a lot of stuff to. It's not like you're. I mean, yeah, it gives you flexibility to do stuff and to assert the control on the pricing and the company when times are tough.
For sure, for sure.
Because my concern was that if Bitcoin goes to, I don't know, X, like 50 or something like that, it all crumbles like a castle in the sand. But you really have a lot of instruments that you can use to help prevent that.
Yeah, and plus a lot of them are, actually, that's why it's a good question. Some of the terms are that they're non-cumulative, right? So if it happens, the company can switch off the coupons, it just won't pay it
Hmm.
anymore.
Hmm.
It probably won't be good, because then people are like, oh, I've
Yeah.
seen it in the banks a number of times in my hedge fund life, where people took the bet, well, the bank will always pay this coupon, because if they stop paying this coupon, even though they can, they will lose access to the capital markets.
Hmm. Hmm.
But guess what?
Matter of
Banks
trust.
would banks would still do it. If they had to do it, they still do it. So,
Hmm. Hmm.
and the market has a short-term memory, as you know. We know this from meme coins, right? People have a short memory. So a year later, they could probably issue the same thing again. People don't care. But it's absolutely right. It's a very stable system right now. The level of these credit instruments is still very limited compared to the value of Bitcoin. So
Hmm.
it's quite robust right now.
Okay, go ahead.
Yeah, I was thinking right now that it was a very good move by Bitcoin Amsterdam and to make it as a tool of information. Why? Because I finally understood the mechanism of the treasury companies. I mean, this month, after the sale presentation, even more now in our discussion, and it struck me that it's a matter of information, right? I was maybe didn't trust so much, or wasn't involved in studying treasury companies so much. So I was like, are they fishy or not? I don't know. Just stick to Bitcoin. But now I understand it makes sense. So giving information to people, educating them makes a lot of sense for treasury companies to become grower and grow their user base.
Great,
Because
absolutely. No, I
they have
appreciate it. It is good from so many angles. There's definitely that element, right? The education, etc. Also, it's good for our name, right? Frankly, it enhances our own name, so it's in that sense a marketing tool as well. So it brings both. It's still also a profitable business. Some people pay in Bitcoin, so we have more bad Bitcoin. So all those things are
I
are
hope
great.
you don't tell them.
Yeah, okay, yeah, we hollow them obviously. So no, so yeah, absolutely right. It's a very good thing. And these conferences, right? I just came from the Middle East, Bitcoin MENA.
Hmm.
Actually, there's like 4 or 5 right now. There's Bitcoin Vegas, Bitcoin Asia in Hong Kong, Bitcoin Amsterdam, and Bitcoin MENA in the Middle East and North Africa. It was a massive event. Great speaker. Saylor spoke. CZ spoke. He went after Binance Week. He went to with us. So I guess CZ and Saylor both spoke at Binance, the Binance event, and they also spoke at Bitcoin MENA. I did a few panels. It was great to get the industry together. The industry, as I said, is changing, so it's great to just exchange thoughts. And as we all know, the industry is super open. Like we're everybody's sort of sharing thoughts, comparing notes. Over time, we're if we're in the same space, we're kind of competitors. But right now, it's still such a big space. We're feeling like we're more like working together than competing with each other. So it's really good.
Yeah, cool to hear. I have one last question. Can stand it. Do you consider adding other cryptos to Treasury, or is it Bitcoin only?
It's Bitcoin only. Yeah, yeah. Because it is. I think it really only makes sense with digital gold, because with that in mind, you can also think towards becoming like this massive financial institution that uses the strategic reserve asset being Bitcoin to make the ecosystem stronger and do business. And I could not see that with any other crypto. So that is an absolute very easy answer actually.
So no fart coins or gems like that.
Exactly. An exception for Fartcoin. Yeah, just kidding. So,
Okay, gentlemen. So, thank you for your time, King. Thank you for the information. It was very cool, very informative, and clarifying in a way. Because, I mean, yeah, as we've mentioned a couple of times, like Strategy is a public company, and the information is out there, but it's complex and it's hard for for a person that's not involved in financial operations to understand them. So you made it much clearer for me.
great. Appreciate.
Yeah, thanks for joining. Yeah, it was cool, and would be happy to host you again.
Fantastic. Thanks so much, guys. Vic, Dimitri, great question and great to meet you guys. Thanks so much.
Yeah. Thank you, King. See you next time in Amsterdam.
Absolutely. Look forward to it. Take care.
Okay.
Bye.
And Dumitru, you wanted to say something to our audience.
Yeah, as usual, guys, stay safe and trade smart.
Okay. Thank you everyone for watching. Have a great day. Bye.
Bye.
Bye.